So the market came back from a long holiday weekend today, and what did it do? It basically choked almost everyone, while most traders are getting chopped by the confusing signals watching the stock future side. Generally having a rough start of September. A very different story was playing out. A small savvy group of investors was having a fantastic day, and no, they weren't glued to the same tech stocks that everybody else. In this video, I'm going to show you who really won, who lost, and expose of the corner of the market they are watching, and most people basically completely ignore, while breaking down the exact assets as that are sorted a new all-time high, and figured out how. And on a day of whispering confusion, some people were still making a killing. So let's not sugarcoat it. Coming back from a Labor Day weekend, today was choppy and confusing sessions for more people. Most of the people, the action actually started last Friday when we saw same serious profit taking, especially in the big tech names. The Nasdaq composite slide over 1.2%, and the S&P 500 fell about 0.6% that day. Today, the anxiety continues. Stocks futures were down before the market even opened, with Nasdaq 100 futures leading the way down. So if you were watching the major stock indexes, it felt like market was nervous and directionless. Why all of this basically jittered? First, there's the calendar. September is a heavy and nasty historical reputation for being the second worst performing month of the stocks. And that size gets into traders' head. It can become a fulfilling prophecy where everyone is a little quicker on the trigger to sell. Second, court ruling on Friday declared many of President Trump tariffs legal, which sounds like news, but actually creates a ton of unclarity. It raises the question about government revenue, and could lead to Treasury having an issue with the debt, which making bonds market nervous. Finally, you had a pocket of total chaos in individual stocks. For instance, the EV market near reported earnings, despite some positive signs in delivers. The stock plunged, aimed the corner about its path to profitability. Meanwhile, everyone was on the edge of their seats, waiting for the Claire's earning after the bell. This is kind of a messy headline-driven action. The futures, the majority of traders. If you felt a little lost today, you are definitely not alone. So where did the real pain of confusion came from? It came from a market that was sending completely mixed signals for weeks. The game was simple: buy tech, buy the S&P 500, and ride a wave. Today, the playbook got tossed out of the window. The dip just kept dipping. Think about it. Think about the average trader mindset. They see futures a bit weak, but they been call it considered about the every single dip. So they stepped in, but the bounce never really came back. The market just charms leaving the call it stock bleeding slowly. That's when the frustrations kick in, and a trader was supposed to be a quick win turns into a sore of anxiety, and confusion wasn't just in stocks. The bonds market was sending its own warnings as well. Yield of government bonds, especially long-term ones, were raising. The 30% year Treasury yield crept up and getting uncomfortability close to the key 5% level. For that average person, raising yield mine sounds boring, but it's a huge deal. It puts pressure on stocks valuations, I'm sorry, especially for those high-flying tech companies whose whole appeal is based on future growth. This was a market symptomatically pushing everyone who thought it easy to ride up this wave would be thought thinking about it's gonna last forever. While the chaos is unfolding in stocks and bonds, the smart money was piling into assets that heavy blockbuster day, while everyone was mesmerized by the Nasdaq's everyday wiggle. They completely missed the screening signals from another chart that the people was absolutely crushed today, where the stocks with the stocks trader, the big winners was the gold bugs, and not just the casual investors, but those who understood the big picture and were in position to basically position their money in the right place. While the stock futures were struggling, gold was doing the exact opposite. It's stacked on the powerful rally, blowing the past in previous records to hit a new all-time high above 3,500 an ounce. This wasn't some tiny hesitant move. It was decisive breakdown that screamed a major shift in investors' psychology is underway. While stocks trader were getting chopped to pieces, gold trader was celebrating. This is a great diverge that mainstream financial news often gets wrong. They tell you the market was shaky, but that is a lazy, incomplete story. The winners were the ones who saw the written on the wall. They understood that the growing worries about the government spending and policy and clarity would be sending the money rushing towards safety. And for literally the thousands of years, safety was had no name, no any other name, just gold. They tuned into the noise, and they tuned out of the noise in the tech sector and focused on the real signal. And today, the signal was flashing bright green, and a precious metals market. So they, how did they nail the trade? It wasn't like a guess. It was a calculated move based on a clear signals everybody can basically see. First, the fight to safety is obvious. You had nervous in the stock market and rising government's bond yield, both which was signals and investors getting worried about the risk. When the big money gets scared, it doesn't just sit down on the sidelines. It's took over. Basically, it's look for a safe harbor. Gold had call it the ultimate safe haven for haven assets for centuries. The winning trades didn't give to call it. We'll say they didn't have to predict the future. They just had to see the fear creeping into the unknown, where the money would be likely run into. Second, they were watching the U.S. dollars. The dollar was seen as weakening, and their classic inverse relationship here, and a weaker dollar generally makes gold, which is preside in a dollar, cheaper for virgin buyers, boosting demand. But more than that, the weakness of the dollar often signs declining confidence, which again push the investor towards perceiving stability of gold. Third, and this is the big one, they looked at the past daily chart and they saw a bigger trend, and call it central bank around the world have been steady directing of U.S. government's bonds and adding on their gold reserve. They isn't spectacular bet. It was a major long-term strategic to shift by a biggest players in the financial world. That underlying demand from a central bank has been building a solid floor under the gold price for the month. Today's market jitter just acted as a spark that lit up the fuse on a rally that was already and ready to basically spring. The winning trade wasn't completed. It was simple, powerful idea that as fear, as uncertainty rise, money will follow into the ultimate store of value. If you want to learn how to spot these kinds of massive opportunities and understand that the micro forces that basically really drive the market, make sure to subscribe and hit the notification bell. I post this breakdown all the time, so you're never caught on the wrong side, and you'll be able to trade again. Don't if you don't want to miss it tomorrow, if you don't want to rule your portfolio, like and subscribe. Let's wrap it up. Today was a classic tale of two companies, different market for 99 of the traders. 99% of the traders started their stock screens, and it was frustrating, choppy day filled with confusion and anxiety. But the 1% who were watching the bigger picture, the ones that basically understood the global fight to safety, it was incredibly profitable day. They watched the gold, they saw the fears in the bonds market and weakness on the dollar, and they knew that the massive underlying demands from a central bank today, the big winners were in gold. They didn't fight the market. They listened into what basically the market tells them. They saw the nervousness in the area of and correctly predict that their money would be flow next, and basically, and that brings us to the one important question for tomorrow. Today, the winning trade were gold historical breakdown, but now that it hits all-time high, what's next? The tech stocks find their footing in the bounce back, or today's massive start today messed and the start of the bigger correction of the second day, or the dead gold send us a gold screaming every time how the next 24 hours are going to be absolutely critical, and you need to be well and be here to be prepared for the break at all time. I wish you successful trading, and I'm gonna see you on the next overview. Thank you for watching.